Sinha, CEO and MD of Tata Power. Mr. Sinha, hi, morning. Operations little bit hit because Mundra was not there, but overall, how do you sum up the quarter?
Good morning, Sajid. Thank you for having me on your show. I think without Mundra also we've done quite well. In fact, for the full year, we've crossed 5,000 crore PAT, which is the first for us. And this is in spite of the fact that we had a loss of nearly 1,100 crores for the full year for Mundra. So if that would not have been there, we would have done much better. Now that the Mundra issue is behind us, we do expect that our performance in the coming quarters will be very good. All our core businesses are doing exceedingly well, and we do expect that going forward, you will find very good performance from Tata Power.
Renewable generation had some issues with respect to curtailments as well. How do you see that panning out?
Yeah, that has been a concern. It's a pity that the plants are ready and are not able to evacuate power because of the curtailment. Some of the transmission lines which were supposed to come are expected to get completed in May, June, and hopefully in the coming quarter we will possibly see an improvement. We have also now been conscious that we set up the plant only when we have a proper evacuation arrangement, and we should not get into partial evacuation arrangements. So I do expect that with more and more of these transmission lines coming up and our projects getting aligned to those timelines, we'll be in a much better position. This year we have a huge plan of nearly 2.5 gigawatt of in-house utility scale projects. So we will see a huge amount of increase in the performance of our generating assets from renewable. So I do expect that these are temporary things, and we will be able to overcome them in short period.
What was heartening was the TP Solar business, 40% jump seen there. How's that business panning out? And currently, whatever you're producing is being used for internal use. Is there a plan to sell out, sell outside the internal use as well?
So our renewable business overall PAT increase for the full year is nearly 60% high. And this has been basically because of very good performance by the manufacturing plant. The manufacturing plant has stabilized. The PAT of manufacturing is 857 crores, which is nearly double of the previous year. And this year it will further improve because many of the efficiency measures that we have taken, cost reduction measures that we have taken will get panned out. Similarly, our rooftop business has more than doubled, and we expect that similar type of momentum will be continued in future years. So I think on overall basis, we've done exceedingly well. There was an issue of Mundra, which I think we have now sorted it out. And with our existing operations of generation, transmission, distribution, renewable, you will see a very, very solid performance in the coming quarters.
Mr. Sinha, hi, this is Harsh also joining in. You suggested that, transmission lines may get active in May and June. What does that do, sir, in terms of how much of power, therefore, can you evacuate incrementally more?
So there are 2-3 places where we have bottlenecks in terms of transmission. We expect that at least 2 of them will get sorted out. One will still have a challenge, and that is only coming up by September. So we do expect that at least 50% of what could not be evacuated in the last year, we will be able to take care of that. And the balance will come in a little later part of the year. So yeah, transmission constraints are something which is a great concern for the industry as well as for us in Tata Power. And we have been discussing with all the transmission entities who are supposed to implement these projects to expedite. Of course, they have ROW issues and some of the issues about equipments coming on time. But I do expect that this will stabilize. And now, of course, we are very conscious that we only set up the plant once the transmission lines are fully ready and operational.
Is that going to be a big issue going forward? Because currently, from a country point of view, we have 250 gigawatts of renewable, which is there. We are aiming for 500 gigawatts by FY30. Uh, this evacuation of power and the kind of investment that is required in transmission and distribution, do you think that it's a little slow, how it's unfolding?
It's a question of timing. The renewable projects now come much faster than the transmission projects, and the understanding now is that many locations, especially the green corridor, will have the transmission lines work starting much before the allocation of renewable projects, so that we do not have to wait for the lines to come when the plant is ready. I think a lot of work is happening on those lines, and hopefully our overall target of 500 gigawatt of clean energy by 2030, we will also have enough transmission facilities to evacuate all the power that is produced in these plants.
Also announce additional capex of for ingots and wafers. How big is it, and how do you and by when do you expect that facility to also come in?
So it's a 10 gigawatt in two phases. The first phase is five, and the second is another five, which will happen with gap of about 6 months. The total investment is about 6,500 crores, and we do expect that the first of the ingot and wafers will start coming out by first quarter of I would say 20, or I would say the last quarter of FY28. So that's the plan as of now.
Mr. Sinha, in terms of PLFs, give us a sense. Wind PLF has been sub 12% for you this quarter. Solar also has been sub 23%. Concerned, and what should the normalized PLF be? What are your internal expectations like?
See, normally it is a function of what sort of wind speed and what sort of solar intensity is there. Last year was not a great year for solar because of extended monsoon. We also did not see too much of wind improvement, but yes, it was better than what we had anticipated. So we do expect that in this year, our solar and wind should be able to operate at full capacity. A lot of improvement steps have been taken at the plant in terms of better management, better operational efficiencies, because the availability of most of the plants, especially the solar plants, are in the 100% or 99.7 and above percent. And in the wind also, it is more than 98.5%. So I think in terms of availability, it is there. It's just that the resources, the wind speed and the solar intensity has been much less. And we do hope that in this year we'll be able to make up for whatever reduction was there last year.
Mr. Sinha, the other piece which is moving in the market, at least today, is the fact that BCD and duties in general on silver have been hiked. What does this do, sir? If you can just give us a sense, how much or what kind of component is silver in the overall renewable capex broadly, and how do you think of this hike? Does it translate to you?
So this basically will lead to increase in cost of the solar modules. In terms of cost, it's about 7-8% of the total module cost. So it's not that it will move the needle very much, but yes, about 3 to 5% increase in module prices will happen. So that's what we are expecting, that from the earlier prices, about 5% increase will take place going forward.
Can you also give us a sense of the coal profits this quarter? You got around 50 crores of profits coming from coal as well. Do you expect that to continue? Mr.
So
Sinha?
we do expect that coal profit will improve. Yeah, the coal, we do expect that the coal profit will improve this year. We had seen that the coal prices have gone up by 5 to 7%, and we do expect that the benefit of the market uh, consolidation that takes place and the availability of coal, we will be able to see a much better performance. But I don't expect too much of improvement. Maybe a 5 to 10% increase is something that I would guess.
Mr. Sinha, truly appreciate you coming in and giving us all of those views with regard to Tata Power. Thank you so much for coming in and speaking to us.
Thank you.
All right, we'll slip into a very short break, come back, continue corporate conversations. We'll have Deccan Gold, the management coming in, giving us a perspective of what this means, the hike in BCD, as well as what are the kind of production timelines they're looking at in some of their mines. We'll get a sense of that on the other side of the break. Stay with us.